Have you seen what's going on out there? Here's a trader who plowed a hefty $150,000 of his savings into Tesla TSLA options, and then there's this guy. He bet his entire IRA on options tied to tech stocks. These gamblers dabbling with options are part of the tsunami of private investors who swept the market during COVID. Wall Street used to laugh them off because they didn't have enough cash to stir the market. They were mere fry compared to market whales like investment banks and pension funds, which own 80% of the stock market. But as it turns out, small investors quietly exploited derivatives to outinvest Wall Street and became the rocket fuel that sent tech stocks to the moon. However, a pullback may be looming. How options work in a nutshell: options are contracts that you can trade on a stock exchange like any stock. They come in two forms: calls and puts. Calls give you the right to buy 100 shares of stock at an agreed price until a certain date. When the stock rises, you make money. Puts are the opposite. They let you sell the stock at an agreed price, and act as insurance if the stock falls. Most important here is that options give investors leverage. For example, for $400 today you can buy a call contract that gives you a right to buy 100 shares of Apple AAPL at $112.50 until October 9th. The same $400 would buy you just shy of 4 shares of Apple. In other words, options give you the power to hold hundreds of shares for just a slice of the cost it would take to actually buy them. They also magnify your returns or losses. If Apple jumps to, say, $122.50 by October 9th, you use your right to buy 100 Apple shares at $112.50, which you then sell at $122.50. Take away the premium, $400, and you've pocketed $600, a 150% gain. Meanwhile, Apple shares would have handed you an 8% gain in the same situation. Small investors are piling into tech options like never before. Institutional investors putting in large orders used to rule the options market. But in 2020, swarms of return-hungry mom and pop traders quietly threw them over. Look at the chart below. As the market rebounded, small investors began snapping call options like there was no tomorrow. In August, they bought 6x more call options compared to a year ago. In just 4 weeks starting mid-August they forked over a record $37 billion on calls, according to Sundial Capital ResearchAnd. Get this, at one point individual investors made more than half of all options trades in the market, out-investing even Wall Street's whales. Remember, they typically control 80% of the stock market. I've looked into what they bought. Here's a list of stocks with the most active options: tech highlighted in yellow. No surprise, 8 out of the top 10 stocks are household tech darlings, including high flyers Tesla TSLA, Apple AAPL, and Nikola NKLA. Now here comes the most interesting part.